Wanted to get to Tesla at the 12-minute mark, and I did. Jay, what up? All right, just wanted to give you kind of an opening volley on how you'd summarize what the street is infatuated again with or happy about with Elon this morning.
Yeah, so I mean, obviously Tesla reported last night, if you didn't happen to see any major news network, and the shares are trading up pre-market. I mean, I think Tesla is a crowded short, as I think you indicated. We look to short squeezes, not press on weakness. It's a crowded short, so the market is typically already expecting bad news. That's why there's such a large number of shorts, and shorts often find themselves covering the news when it's good or bad. So we look to short squeezes, even though it can be hard to maintain that discipline. The core of the bull thesis in Tesla is that demand is so strong that one day Tesla will sell enough cars that they can make up for these losses per car on volume and actually finally turn a profit. They can just sell enough cars. And what I think is really the only real thing I thought was interesting about the release last night is that they did sell a lot more cars, and they reported almost exactly the same loss that they did in the first quarter, right? So they didn't see, sort of the high incremental margins on production that a lot of, the bulls were hoping for. Other automakers would obviously be profitable at Tesla's volumes, and, the problem is that Tesla run a lot deeper than just not producing enough. In terms of what is key to the story, and I think people are looking at the financials, and they keep losing money trading the financials. Their earnings revisions have been negative in Tesla for like 5 years. But the brand is the key to the story, right? When we run surveys we've run surveys on Tesla for a while, and what comes back is this amazing perception of Tesla as this ultra premium brand, the Hermes of cars. One question that always gets me is we ask which car has the best build quality, Toyota, Mercedes, or BMW, or Tesla. And 87% of respondents in our first survey said Tesla had the highest build quality, which is absolutely ridiculous. Wow. This is a company that won't even participate in initial quality surveys. But as they transition to mass production, we're starting to see quality issues, a lack of service infrastructure, the bait and switch on a $35,000 Model 3. These are things that hurt the brand. And when you look at the history of durable goods or cars specifically, mostly great brands have been made by outstanding manufacturing. I mean, the Model T was not a branding success; it was a manufacturing success. Toyota, the Camry is a huge success because you get in the thing and it always works, and you don't have to worry about it. So if quality fails, the brand should go right along with it. It's also weird to me that people expect Tesla shares to respond rationally to earnings, and it's like literally every time people go into the earnings releases looking for a great short catalyst in earnings, and then they find it's not, and then they're surprised by that. It's just never mattered. Next quarter probably won't matter either. There are also, I think, a lot of people looking for some kind of SEC response or disclosure. There was a question on the call about investigations. I think if Tesla is a fraud, they're doing it wrong by reporting $500 million losses each quarter, right? If you're going to be a fraud, you might as well get out there and really make up some numbers.
Good point.
And the SEC is more like, a cleanup crew. I don't think they're going to want a causal role in bringing down a super popular, among the left wing of the United States company. The market takes it down. The regulators typically sort this kind of thing out. One thing that is interesting, I think you alluded to some of the data that we built internally, and it's really proving to be remarkably robust. One thing we to track is test drive utilization. So are people going into Tesla dealers and driving Teslas? And we saw a really sharp drop, actually the lowest test drive activity of the year, when Elon Musk became a Republican donor, was disclosed as a Republican donor, and after his Tide Diver, Hedos tweet that he sent out, it actually hasn't recovered, so we haven't seen a big comeback in test drive utilization.
Oh boy, that's not good. That's new. Did Elon talk
Yeah,
about that yesterday? The Republican thing and the tie diver stuff, or no? He was just
no, I
apologizing.
suspect that's why he apologized, perhaps. And I think the Venn diagram of Trump lovers and Tesla buyers is, Republican lovers and Tesla buyers is, basically two non-overlapping circles.
The Venn diagram. Well, this kind of thing, though, Jay, is this when you look at the go forward case, most people will say something, and it's not like just people tweet at us all the time. I mean, there's some angry shorts out there who've lost, like I said, their hedge fund or their reputation for shorting it the whole way up for the last 3 to 5 years. But then there's a lot of people out there who just think it's the next Amazon, because the way to have a company in this day and age has got to be Amazon. If you lose money and eventually you make something, you're going to be like Amazon. So people say that too. What do you think about the forward outlook of some level of profitability?
Yeah, I think Amazon makes its money on web services, if I remember correctly. But
yeah, they're a pretty good manufacturer of a lot of different things now too. I actually got 6 white T-shirts for $6 at Amazon.
Oh my God, yes.
Yeah, it's pretty good.
I started buying like Amazon exercise clothing. It's fine.
It's nice.
Just get sweaty.
Yeah, so we're short Hanes Brands tighty whitey against my Amazon undershirts. But again, to the point, what is it about this profitability point that you think we're going to be talking about at next quarter and the quarter after that?
Yeah, I think Tesla's ramping production into a series of spectacularly negative catalysts. So, one, the electric vehicle market wouldn't exist without subsidy and regulation, right? So they're selling emissions credits. They receive a $7,500. $7,500 for a car is a lot of money.
Massive.
A tax credit. And that starts to go away in the first quarter. So it gets cut in half in the first quarter of 2019. And competitors are entering who will still have the full tax credit. So they will be competing at a tax credit disadvantage. And when we actually go through and try and model the impact of, like, how much does demand drop for a, say, $4,000 price hike, we can go through and do that. And it's about a third of the market for north of $40,000 cars. About a third of the market goes away for each $4,000 or $5,000 increment of price. So I think people are vastly underestimating the negative impact of the tax credit roll-off. Another one that I think is totally unrecognized is that California is removing HOV access for the vehicles registered before January 1st of 2017. So in California, I know HOV things can be crowded too. I get that response a lot, but in a lot of places, like, if you can just pay a little more and have HOV access, that's worth it. You avoid some traffic. You pass all the people who can't afford a Tesla. And we're seeing an absolute cratering in used car prices for model years before Jan 1, 17. So 16, 15, 14 are just dropping like rocks into the first quarter of 2019 in the data we track. And that may seem like, it's a used car, who cares? The residual values are very important for, estimating the cost of ownership, whether it be for a lease or just if you own the car for 5 years and sell it, what's it going to cost you? And Teslas have historically really held their value, and that is no longer, as of really this month, the case. So there's a few major negative catalysts coming, and this company is just ramping production, assuming demand will be there. And I think that's where with the quality issues, the tax credit roll-off, HOV roll-off, some other factors like that, it ends up being a huge error.
Yeah, that's a lot of things you just don't quite get from the old Walnuts media, do you? Because of course, if you said anything bad about Elon, he'd cut you off or call you many hugely bad names, as we've seen with the tie divers. But again, if you look back at what this stock can do, and maybe we can wrap up on this, you were not like most bears. You do respect market timing, and you were looking for catalysts, which you've named a few: the tax credit, California HOV, et cetera, falling residual values of the ones that have already been bought and used. So again, you came into this thing June the 9th, I believe. The stock was like 350 something. just missed the top, like by which, you and I had some career risk management talks about that. How dare you miss the top of Tesla by like a week and a half? But again, the top for Tesla was what, 370 something, maybe something like that. I would love to short, I said this yesterday on Twitter, I would love to short this sucker at 350. I'd short it with impunity at 350. We don't have it on the investing ideas list anymore because I like to cover it low because, I got the whole world against me on this and all I have, no offense, is on my side. That's been the only accurate and publicly accurate Tesla bear out there. So at 350, the market's telling me we're not going to get 350. Am I being too greedy on that? A lower high of 350? What if I only get 330 today, Jay?
I think you pick your spots. No one ever makes you short anything. So, you can wait for your number. And, when the sort of that momentum, I think you have a good model that sort of identifies those inflection points when it starts to inflect. Hey, go for it. I mean, I think in 3 months, the whole conversation about 3 quarters by the end of the first quarter of 2019, I suspect the whole conversation of tactically managing a short, besides the fact that's very important for a lot of our clients, we'll seem a little bit moot. I mean, this is a company that's going to be in a lot of trouble pretty clearly by then.
That's good to know. That's what I want with a short. I want a company that's in a lot of trouble. And again, it looks like if Elon didn't take down that one tweet we were calling about on the other day, he might be in a little bit more trouble reputationally as well. So thanks for your, as always, thanks for your wisdom on this. We'll keep everybody focused on Tesla. Of course, if you don't subscribe to Jay's work institutionally, you got to pay for that. We give you the highlights of it on sometimes a delay, sometimes not. Today's no delay, obviously. And again, hopefully, if you have any questions on Tesla, just ping Jay. He's quite responsive, and I think he's quite humble on Twitter. So if you have any questions, it's Hedgeye Industrials without the full spelling of industrials on that. Jay Van Sciver is his name, i.e. the man on Teslas.